Welcome back. I'm Peter St. Onge. This is a weekly roundup of my daily videos on the economy and freedom, where I cut through the BS and lay out what the gaslighting clowns pulled out of their hats this week and what is coming next. New numbers say inflation is cooling again 6 months into tariffs that were supposed to send us into hyperinflation, and cat food for grandma, guess it was transitory. Last week, the notorious Bureau of Labor Statistics released CPI inflation for September. Note, September means before the government shutdown, and the BLS itself is laid off as non-essential in the shutdown, but they forced them to come into the office and tally up CPI since it's used to calculate next year's Social Security, and we don't want riots at Golden Corral. Inflation for the month came in at 0.3%, down from 0.4% last month. This sparked a rally in stocks since it's a green light for the Fed to keep cutting rates, with markets expecting 2 more cuts by the end of the year, which would basically take us to neutral. This matters because lower rates spark growth. By one estimate, each point of rate cuts is worth almost 1 million jobs, but lower rates also spark future inflation. The inflation, however, usually takes a year or 2 to show up, meaning the jobs are here today for the midterm election, say, but the inflation may not appear until the next president, in case you are curious why presidents always want lower rates. The problem, of course, is 0.3% monthly inflation is still high. That's a 3.5% annualized, way above the Fed's imaginary target of 2%. The extra inflation last month was almost entirely from energy, with gasoline prices up 4% in a single month. Now, that was mostly one-offs, a perfect storm of refinery maintenance, a strong Labor Day, because when wages are strong, people drive more. Meanwhile, domestic inventories are tight between rising exports of American oil and falling production in Russia and Iraq. Everything else behaved. Food inflation was 0.2%, down from 0.5% the previous month. That's despite soaring beef prices, where Trump is now quadrupling beef imports from Argentina to take the edge off. Rent was a paltry 0.1%. Deportations have consequences. Used car inflation also plunged, which is also an indicator of deportations. They have to sell the car on the way home. Tariffs once again failed to show, to the point multiple Fed members now think tariffs may have no durable impact on inflation. Better late than never. I've been predicting for a year now that tariffs will not do much to inflation. So what's next? Slowing inflation is taking the fight out of a Fed that's been stonewalling Trump's rate cuts and all those juicy millions of jobs. The Fed speeches are now turning to weakness in job markets, which is the bat signal to cut. Zooming out, Congress fumbled the chance to slash inflation with spending cuts and regulatory reform. Instead, here we are in the trenches with refinery maintenance and selling used cars. The risk is, with inflation still bouncing around 3%, the Fed will once again cut too much, sparking an inflationary easy money tissue fire. Pair that with Trump's trillion-dollar investment boom, much of it strong-armed from foreigners and his trade deals, and we could see epic jobs numbers in a year or two, together with an equally epic jump in inflation. The government shutdown could theoretically last until 2027, according to Zero Hedge. Dare we dream? As the federal shutdown enters day 28, we are just 1 week shy of the record set back in 2018, when Trump wanted a border wall and Democrats wanted new voters. Republicans ended up surrendering on that one with not 1 penny for the wall, but this time, amazingly, Republicans have held the line. This is probably because polls are showing the shutdown is not actually hurting Republicans. In fact, their odds in the midterm elections, which is the most important thing in Washington right now, have actually gone up since the shutdown began, now hitting 40%. That's pretty impressive considering the party in power has won midterms just 3 times since 1934. Yet here we are, near even after 4 weeks of shutdown. Now, the polling suggests mainstream media's lost their mojo, while Trump has been very careful to keep funding everything popular, so the military, ICE, WIC for pregnant women, while starving all the left-wing garbage, the foreign aid, money holes for New York subways and wind farms, Foodstamps for illegals. So there's little pressure for Republicans to cave. They win by doing nothing, which, to be fair, is already their comfort zone. And that takes us to Zero Hedge, who asks, how long can it keep going? Now, the key is most past shutdowns were paired with a debt ceiling, which makes markets panic about treasury payments, which are the lifeblood of our Ponzi financial system. But the next debt ceiling doesn't hit until mid-2027. That removes the external pressure to cut a deal. So if the world's not ending, if markets aren't even noticing the shutdown, if Republicans are rising in the polls while Democrats are afraid of their Antifa base, nobody needs a deal. In theory, this means they can literally keep going until 2027. So for fun, what if they do? For starters, 2027 is far past these 61 days needed to permanently fire federal workers. The Office Management and Budget has already officially fired roughly 10,000 and can keep going to, in theory, all 750,000 who are officially listed as useless or non-essential. GDP shrinks because government spending counts as GDP, which it should not. Jobs also shrink as thousands of federal workers no longer collect six figures to look out the window or fund riots. So GDP and jobs look bad, but both make the country richer. And then the big one, the national debt. Keeping the useless third of the federal government closed for a year and a half would save roughly $2 trillion. Could actually be closer to $3 trillion. Now, it's hard for Congress to respend the windfall in a shutdown, so that could go directly into a budget surplus that would start paying down debt. That would lower borrowing costs on the debt in a virtuous cycle. In fact, it would lower borrowing costs across the board to factories and families alike. More important, shutting the useless third of the government for a year and a half would plant these seeds in voters' minds that maybe we should permanently defund it and make the surplus permanent as well. So as next, Kalshi odds on the shutdown are still only 44 days, so we are a long ways from 2027. But if Senate Republicans miraculously hold the line, it is possible to get the transformational cuts their voters actually want. A word from our sponsor. If you own gold, and many of you do, you already understand how it protects your wealth from the insanity coming out of Washington. The inflation, the recessions, the wars. But with monetary metals, there's a way to actually earn a yield of up to 4% on your gold paid in more ounces of gold. You retain ownership of real, allocated physical gold with no storage costs while your ounces grow every month outside the banking system. If you're serious about protecting your future and building your legacy, head to monetarymetals.com/Peter to get started. Now back to our show. Food stamps are about to end for 42 million recipients who are overwhelmingly Democrat, held hostage for free health care for illegals by their own party. Many are threatening to turn to shoplifting, steal direct instead of using the taxpayer. Some are promising to riot. One says her cousin will go to the store and, quote, punch your ass so hard you're gonna think a jet hit you. Another promises to don, quote, steel toes and a mother-loving helmet to extract her desired calories. Happily for these young ladies, you do get free food in prison. Now, food stamps are ending because they're not categorized as essential government services, meaning they've only got the money on hand before the shutdown, which comes to just $6 billion in a contingency fund meant for disaster relief, while the program gobbles up $8 billion per month. Now, so far in the shutdown, Trump's bent the rules to pay for popular stuff like military and air traffic, while Social Security and Medicare keep going anyway. But he's not going to bat for a program where just 1 in 6 recipients are Republican voters, and it's Dems' shutdown. In fact, more foreigners get food stamps than Republicans, including millions of illegals using anchor babies to get on the gravy train. Meanwhile, the administrator of food stamps, the USDA, admits fraud is over $1 billion a month, probably higher since feds don't narc on themselves. The background here is food stamps started in the 1960s, pushed by unions to make it easy for workers to strike, while Democrats wanted to buy votes. It worked a charm, leading to 4-month strikes that wiped out manufacturing, leaving cities like Detroit with nothing but food stamps and welfare. One study estimates half the job losses in manufacturing were strikes, more than China. The problem is food stamps have no time limit. Clinton tried, but 31 mostly blue states undid it. So instead of being a temporary hand up, 2/3 of recipients have been on food stamps more than a year. 1 in 5 have been on more than 5 years, some 10 or 15 years. This is a problem across welfare, from cash payments, TANF, to free utilities and Obama phones, to Section 8 housing and Medicaid. One Cato study estimated welfare is equivalent to a pre-tax wage of $40,000 to $60,000 a year. And if you do get a job, which probably pays less, you lose it all. Spot the problem. So at SEX, the food stamp Armageddon puts pressure on Democrats to reopen government with no additional spending, a so-called clean continuing resolution. And it dovetails with a push this week by one of the largest government unions telling Democrats to quit screwing around and pass a clean CR. You've lost your own unions. So worst case, Dems reopen with no new spending, throwing away shutdown leverage they'd hoped to spend years using against Trump. Best case, Dems do nothing, the shutdown keeps going as voters gradually realize we don't actually need these 750,000 federal workers who are currently furloughed. For once, Republicans are playing hardball, and Democrats are about to think a jet hit them. France is imposing a wealth tax, an economic neutron bomb that, like socialism, has been tried many times and failed many times. This time, maybe it'll work. This is despite the highest tax burden in Europe, 57% of GDP, and near flat economic growth in France going on 20 years, which a wealth tax will make worse. Now, they're doing it in a desperate effort to reassure bond investors that France can handle a national debt that has quintupled since 1980, with an annual deficit of 5% of GDP, the highest since the 2008 crisis. Now, America's deficit is actually higher, but then France does not have a reserve currency to force foreigners to finance our debt, while France does have a paralyzed government where no party is in majority. The tax will probably pass since it's rabidly popular with 80% support among French voters who resent people who build stuff instead of stealing it from voters. So wealth taxes have been tried over and over in Europe and have failed every time because they wipe out far more wealth than they collect. Norway's wealth tax was expected to collect $150 million a year, but instead $54 billion fled the country, taking $600 million of taxes with them. In other words, taxes went down. Sweden's wealth tax increased rich people leaving by half, including IKEA's founder and the rock band ABBA, one of whom estimated they were keeping just 10 cents on the dollar they earned, trying to stay alive. Now, France itself had a wealth tax until 2017, when it was repealed because it too drove out tens of thousands of millionaires who took tens of billions of investment with them. The tax reduced investment by more than 5 times what it collected. So the problem with a wealth tax is that it's very easy to make it very big. For example, the French one is a 2% annual tax, which sounds quite reasonable. Thing is, going by the Forbes 500, rich people only grow their money by about 5% a year, meaning a 2% tax is actually confiscating 40% of your returns. Toss in income tax that are already over 50% in France, and you get to 90%. You keep 10 cents, why bother? The wider issue is in the real world, there's 2 things to do with money. You can invest it or you can consume it. In practice, even billionaires might spend 20 or 50 million on watches and private planes. The other 99% is invested in businesses that create jobs. Might be invested in their own company like Tesla or in other companies like Warren Buffett. But a wealth tax flips this because it's now 10 times cheaper to just spend the money. So instead of creating companies, jobs, and technology, you get exactly what the left hates, rich guys with giant yachts. So if you want to soak the rich, do it with a sales tax, a tax on consumption. More important, going by history, income and wealth taxes always start with the rich, that's marketing 101, and then quickly bleed down to the middle class. So consider America's income tax was designed to hit only the top 1% at a top rate of 7%. Today, it hits 73% of Americans paying a top rate of 37%. It's actually 50% if you're in California. So it's next. Europe's long slide into socialism is accelerating. Unless they radically shrink government spending, which they will not, given half the population lives on government money, it will get worse. A word from our sponsor. One of the best ways to secure your Bitcoin is with a hardware wallet, a physical device that lets you keep your coins offline without internet connection. One of the most trusted names in hardware wallets is CoinKite, maker of the famous block clock. CoinKite devices are made in Canada, and they're run by passionate Bitcoiners who've been at this since 2012, back when Bitcoiners were trading in person at swap meets. You can pick up hardware wallets and plenty of other goodies at coinkite.com/ProfSaintAnge. That's CoinKite.com/ProfSaintAnge. Okay, back to our show. The AI job Armageddon is upon us as Amazon plans to replace 600,000 jobs with robots as they automate 75% of operations, with the first slab of 30,000 corporate cuts announced this week. Meanwhile, Trump's AI czar David Sachs says AI is currently 40% of economic growth, pushing GDP growth to a blistering 3.9%. So which is it? Will AI double the economy or will it double the job cuts? The reality is both, with the danger being the gap between the cuts and the growth. So first the numbers. The New York Times got a hold of an internal Amazon plan to replace 160,000 planned hires with AI fortified robots by 2027 and 600,000 workers by 2033. They estimate this will shave 30 cents off every product they ship, which saves customers $2 billion per month, about $20 per customer. For perspective, 600,000 is the entire movie and video industry in the U.S., studios, actors, production, the popcorn guy at the Odeon. It's also the entire lawyer industry from paralegals to ambulance chasers. And Amazon, of course, is just one company. But differently, Amazon's looking to replace almost half their current workforce with robots in the next 8 years. If they shave 30 cents with robots, everybody else has to do it from Walmart on down. That brings us to that AI investment boom, part of which is funding Amazon's robots. This is made up of roughly $400 billion of AI investment and rising fast. For perspective, that's about a tenth of all the investment in the entire economy in a given year, everything from semiconductors and power plants to renovating the bathroom in your local Starbucks. $400 billion is just the tip of the iceberg. Another couple $100 billion in VC money, another $100 billion in private AI investment. And that's the stuff we know about. Not all AI investment is public for competitive reasons. Put them together and AI job losses are here. And when AI is making up nearly half of growth, it's going to accelerate. Now, a couple months ago, I did a video how 250,000 finance jobs are at risk of AI. Movie and lawyer jobs are on deck. Indian call centers are already being wiped out by AI. So as such, the key on AI jobs is in the long run, we replace lost jobs with higher paying jobs, like a backhoe replaces a guy with a shovel at 3 times the wage. But the short run is the tricky part, the period between Amazon replacing 600,000 people and new services and businesses filling in the gap. The poster child for this is somewhere like Hong Kong, where manufacturing jobs were wiped out in the 1980s and quickly replaced with services at twice the pay thanks to a free market government, compared to Detroit, which also lost manufacturing in the 1980s and 50 years later still has not replaced the jobs, thanks to a decidedly not free market government. So if government stays out of the way, making it easy to start and grow a new business with minimal taxes, we're looking at maybe 5 or 10 years of an extra point of unemployment, maybe less if we deport enough illegals. If not, we will get a brand new permanent underclass of millions. Bottom line, it needs to be much easier to start and grow a business in America, and the stakes are rising, 600,000 jobs at a time. Thanks for tuning in. Remember to subscribe so you don't miss an episode, and go to petersaintange.com for daily videos and in-depth articles with charts and all the gory details. Okay, we'll be watching. See you next time.